Okay, it is January 24th. We're reporting directly from the trading room. So not only do future prospect traders, somebody who might become a client, get to understand what we do, but some of our current traders who need a review. We're going to go over why markets reverse and the psychology of it. First of all, we want to do the technical concept of the tardy trader trap. The idea is to make money off of the mistakes that we used to make. Everybody used to make these mistakes in the past, meaning you wait for a trade too late. Now, just to review, today's trend so far is slightly down. We've had a tremendous run up, but today the market's selling off. Anyway, so the idea is even within a current trend, we're looking at a 15 range chart. One of the concepts is if you're going to short the market, it's better to be short up here than down there, right? So the idea is that some traders wait too long to get into a trade. I raise my hand. That's what I used to do for 49 months in a row. So I learned how not to be my old self. So let's assume, even in a downtrend, that you get into the short trade too late, right? Here we have a break of support, right? Over there, you see this little where I got my cursor? It's 631. So any normal human being might go short at 630. It's a breakout. Well, the better trade would have been there, but we don't know this. Hindsight is great. But let's show how we trade current. We watch the market coming down. So it's coming down, and we say, wow, the lower it goes, the less profitable a short would have. In other words, there's certain targets or support in the market. The closer you get to support, the more dangerous it is to go short. So somewhere is going to be support, right? It could be zero, whatever it is. Well, you're closer to zero here than you are there. So you better try it there. But we'll assume by the way, the other assumption, and we know some people may be short covering, long covering, but we're going to assume every single trade that goes on, there's a long and a short. All right. It's not really true, but the idea is even if you're buying, the only time a buyer would buy, even a short coverer, right, is because they think the market's going up. Would we agree on that? So if I'm short 1,000 contracts and I think the market's going to go up, I may be bearish, but I'm going to get out by buying. So the buyer thinks it's going up, the seller thinks it's going down. On every trade, there's a buyer and a seller. One buyer, one seller. All right. So we also know that traders who are the bulk of the short term traders don't have that much capital. That's why they borrow the funded accounts, which doesn't make sense to me. Don't pay somebody for a simulator. Don't pay $100 to open a simulated account. Oh, yeah, but they'll send me money. Really? How many of you get money every week from AJ Simulated Traders Incorporated, Ajax Traders? Trade our money. Really? They don't trade your money. You're trading a simulator and they charge you. This is free. Okay, I digress. So the market's coming down. We know that once a market moves around, 16 points immediately. It's not only does it go against you by 16 points, but immediately goes against you. The average trader starts getting nervous. So that's how we capitalize on it. The idea, though, how do you know when the market's going to move up? Well, if these are 15 range bars, it simply means that the bar has a maximum range of 15 points. If a trade occurs that is outside the high and low range of 15 points, a new bar has to form. Okay, So here's a bar. We're on this one here. As you can see, the high is 654, the low is 639. Well, since a bar is forming below it, that means the price must have gone to 638. You can't include 638 in a 15 range bar if you already have 15 points of range, right? Correct. So every bar here is 15 points. So it goes 16 points below the high. Boom, a new bar has to form. So this one, as you could see there, the opening price was 638. The high was 639. So it opened there and then started down. Now, where did it go down? It went down to a low of 624, right? So that means that's a sell bar or triple T, what we want to call the trade. Our idea is that eventually somebody's going to go short too late or sell too late. We don't know where it's going to be too late, except when we take the lowest price and it goes up 16 points from the lowest price. All right. So here, the low is 624. Well, what happens on this bar? The bar opens at 623. That means it closed up there, but it opened down here, right down there. And it opened at 23, made another tick lower. So that means at the low of 622, as you could see at the price there. Here's the low down here. Okay? Let me get this out of the way so I could read the numbers for you here and show you. On this next bar, it opens like it's going to keep going lower. And someone or group of traders, it might be 10, 20, 100, or one, someone went short at 622, 44,622, and someone went long at 622. Well, when that occurred, we have no idea whether it's going to go lower or higher. So we still observe, but we can observe the price at 622. Well, now, guess what? Instead of going down, it starts going up. So that means the person or institution or whatever you want to have it who's short at 622, immediately they're down at the high here of 15 points. But what happens? Now they're down by 16 points. And since this bar took place over about 18 seconds, imagine going short here. Instead of up there or there or there or all these other places, you go short at the bottom. And that's the person, that's the wildebeest that we want to, as lions, kill. We want to eat that person. So somebody goes short there and goes, finally, I gave in, I'm short. Immediately he's down 16 points. That's the triple T. We say this guy is wrong. So we go long as soon as you see the next bar. Remember, on this bar, this one, it can either open above it, or another one forms below it there. If it went below it, we don't go long. We only want to go when we see someone wrong by 16 points. So it opens 16 points above the low. As soon as you see it, you go long at the market. Now, you're not going to get that fill. You might get here. It might even come back down. But now you have a handy reference point for a stop. If this truly is a good tardy trader trap, it'll keep going up, which, as we just seen, look at that nice rally. So you would have gone long in the open at 638 or higher. It might have been 640, 41, but you better have your mouse ready to trade. Don't wait until it's up there and you go, oh yeah, it's working. That the idea is to catch this guy immediately. Does it always work? No, not at all. The other thing is you want to do it when the market's retracing, at least 3 or 4 bars. Just like theoretically, you got a short over here, right? Because this bar, this one that I'm talking with right now, right? This bar had a high of 698, a low of 683, right? So if you said, hey, I'm looking to see the poor guy who goes long up here, that's the other thing. You don't want to start going long up here. You want to go start long down there. So the guy who went long down up there already is starting to lose. Now, don't get wild on these things and start trading every 2 minutes, but it gives you a good timing entry. At least you're trading against someone else's weakness. So this bar open, and then once it goes up, you can raise your stop from the low of there and keep trailing them. Use then other tools like what? Well, like parabolic, like 20 SMA, etc. Now, we're doing this in the trading room. So let me get back to the trading room. Are there any questions? If not, if there are, we'll add it to the video. If not, we'll shut it down. Okay, since there are no questions, and it seems pretty clear how this one setup can try to help you time your entries better, okay, using the 15 range bars. I hope that adds to your understanding of our trading methodology. Now, we still like to trade in conjunction with the bigger trend, and we have other videos to explain that. Please like this video, subscribe to our channel, join our trading room to actually make money instead of just watching videos all day, and we'll see you at the next update. Thank you, guys.